Hi, Dahlia. Welcome back. Now, okay, as promised, we always said that we were going to talk about one of the innovative products that are coming to the market to help investors, right? And you have a lot to tell about this one specific product. So, why don't you talk about what it's about, the features, and anything else you want to add? Of course, where to reach you.
Yes, of course, Tracy. Thank you for having me on your show. I wanted to update everyone regarding a new, well, it's not a new lender, but it's a new lender in the broker channel. HSBC essentially now is available as a lender with a suite of products that are really good through mortgage brokers. Not every mortgage broker, but select mortgage brokers, including ourselves. And I consider HSBC a great investor-friendly lender, and I want to explain to the audience here why and share some of the offers that they can benefit from, especially given the environment ahead. So that's what I'd like to go over today.
Sure. So, okay, you say it's investor friendly. So why don't you talk about why this product of all the products?
Yes, sure. So HSBC basically finances rentals in holding companies. So you can hold a rental property in your personal name or in a holding company. Not every lender does that. So that's a plus. They also offer secured line of credits on rental properties. That is also not something every lender would consider, but they do. Number two, they are okay with real estate investors who have large portfolios. So up to 12 properties, they would work with you as an investor, but they can only finance 5 rentals. Some lenders will say, you know what, you've got more than 5 rentals, doesn't matter who they're with. We're not interested in working with you, but HSBC would up to 12 properties. So that is a nice feature. Also, how they use rental income. When I look at a lender, I want to understand how much is the rental income they would use. If you have a rental property or if you're buying a rental property, how much of that rental income they're going to use. Why? Because it does help your application. The more income I use or the more income they use, the better chances of approval and you can qualify for more. So with HSBC, they use 80% of the rental income, where several
Wow. Yeah.
several lenders use 50%. So
yeah, I was gonna say that's usually 50%, right? So if this is 80% of the rental income could be added to your income, right?
That's right. Yes, exactly. And here is a big one. And not a lot of clients or investors know this, but let's say you have a secured line of credit. It's attached to a property. Let's say you have a $200,000 line of credit attached to your primary residence or to a rental property, and you have not used a penny from that line of credit. Some banks on the street, when you go in for a mortgage approval, would actually assume in their calculation that you have used the entire $200,000, and they will calculate a payment using, the Bank of Canada rate, which would translate into a big payment today. While with HSBC, they would only use in their calculation what you've used. So if you've used 0, no problem. They're not factoring in anything unless that line of credit is with them. If you've used $10,000, it's just the $10,000. So you can imagine this would make a big impact on the numbers. And that is also a beneficial feature for clients who are finding it challenging right now to qualify under, the tougher qualification rules.
Huh. Yeah, because so that's a really important point. Yes, because if you opened a HELOC against even your own home and say you just used it as, just in case type of fund and you don't have anything withdrawn from it, a lot of other banks, like the top 5 banks, would consider that as still like debt, right? As a potential debt, right? And that really hurts the number. So you're saying HSBC is like, nope, we're cool. You didn't draw any. So how about like a Home Depot, like credit card?
Same thing.
That's amazing because you could have like, just thinking of all the people who are credit card hacking and say you don't use those credit cards, they could actually ding you if depending on what type of bank you go to for a loan, right? And in this case, in HSBC, they're like, you're not using it, it's cool. We're not going to say just because you have a $20,000 credit limit in whatever credit card, we're not going to use that against you because you haven't actually taken money or used it. Oh, that's amazing.
Yeah, huge
So that's a
huge.
Huge.
Yeah.
Yeah, huge.
And then
so then yeah, go ahead. Sorry, I'm just excited, so I keep talking, but you go ahead.
Okay, all right. So the next one is really about interest rates. Actually, HSBC is known on the street to offer some of the best interest rates on the street for both rental properties and for primary residences as well. So they're always offering discounted, competitive rates. And that is also a great thing if you're looking to, let's say, switch and save on interest rates, or if you've got a renewal coming up and you're looking to benefit from lower rates. Every dollar matter right now. So that is also a positive on their end. And then lastly, and also on the rate front, Tracy, their variable rate mortgage product is actually a product where the payment stays fixed if the Bank of Canada increases prime again. Okay, the payment stays fixed, but beneath the surface, more goes towards interest, less goes towards principal. That continues until, some point down the road where the client hits something called the trigger rate, and it happens, when the rates go up so fast, that's behind us already. But in this product, the payment stays fixed, and as the rates increase, more goes towards the interest, and less goes towards principal. And if the rates go down, that mix shifts. So what it does is it gives you the peace of mind that you've got a fixed payment. And then it also offers you the opportunity to benefit from having a variable rate, so that when the rates drop, which they're expected to drop, not this year, and I don't have the crystal ball, but very likely in 2024, you would benefit as a variable mortgage rate holder. So that's a feature, because not all variable rate products are like that. Some variable rate products are adjustable. So as the rate changes, the payment changes. The rate changes, the payment changes. But with these guys, the payment stays stable.
Right. So just to clarify this point, when you're talking about adjustable rate mortgages, which I think a lot of people probably know that more, is like when the interest rate changes, your payments go up to adjust for the higher interest rate environment. And this product that HSBC is offering is say you're you own a rental property and you're like, you charge market rent at $2,500 and cash flows only because there's a mortgage that you have in mind for that property. And so if you go to HSBC, that would be more predictable because you're not going to have to worry if the interest rates go up. And then you're like, then you're in this am I cash flowing situation?
Yes.
So one thing that got me with this question is is there a 10-year kind of thing where you could get a certain rate for 10 years, or does HSBC not offer that? How United States that 25-year mortgages, and then there's a term that you could get a predictable interest rate for 25 years. Does HSBC offer that?
Not for 25 years. There are 10-year fixed rate mortgages, but I wouldn't suggest anyone locks into a 10-year fixed right now. We're at the height of the rate cycle, and if you want to lock in for a 1 or a 2 years. The rates, what goes up comes down. It's not going to go down to the extent we had, at the time of COVID, but locking for a 10 years, you'd be locking in at the height of the cycle. But they do offer a 10-year product.
Right. Okay. Yeah, of course. Yeah, of course. So it wouldn't make any sense to lock in at 10 years. If we're expecting interest rates to potentially drop in 2024, of course, no one has a magic ball. But if in that case, then if you do go with something like HSBC, then the mortgage would just be the same payment. It's just more goes towards principal than to interest.
If you choose a variable rate product, you will get the peace of mind that your payment will stay stable, although it's a variable rate product. Because what changes is the allocation beneath the surface, what goes towards principal versus interest as prime rate changes.
Ah, cool. And is there anything else you want to say? I think there was a signing bonus or something like that, or transfer fee.
Yeah, they're currently offering a cashback bonus up to $5,000 for switching from other financial institutions over to HSBC. They always have good cashback or switch offers to cover, you're switching fees from another financial institution, and sometimes you end up actually with a residual depending on how far it's costing you to switch.
Yes. Well, thank you so much. And of course, where can we find you?
Info at streetwisemortgages.com. If you're looking for, if you have a renewal coming up, if you're looking to take out equity, if you want a second opinion on saving on interest and want to see if you qualify with HSBC, just reach out to us at info at streetwisemortgages.com and we'd be happy to help.
Awesome. Thank you so much.
Thank you, Tracy.
Okay, bye.
Bye.
Hello, everyone. It's Tracy here. I'm a former engineer, now turned full-time business owner. And in this channel is all about empowering you to invest with confidence, using stocks and real estate to create passive income. Now, if you love DIY investing and you want to learn more about it, well, you got to hit the subscribe button and that bell notification button so you get the latest and greatest videos coming to you every single week.